Good morning, everyone, and welcome. My name is Elisa Slodzinska, and I work for the City of Chicago Department of Business Affairs and Consumer Protection, BACP. Welcome to the BACP Business Education Workshop Webinar Series. We have adapted our regular business education workshops at City Hall into these webinars until further notice. On behalf of our Commissioner, Rosa Escarino, I want to inform you that business licenses can be processed online where applicable by visiting chicagobusinessdirect.org. And any websites or emails that I mentioned will be posted in the chat box, so you will be able to reference them there. And if you are part of the BACP Entrepreneur Certificate Program, you can get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. If you want to learn about the program, please visit chicago.gov/businesseducation. To help guide your business and employees during Chicago's reopening process, including the recent modifications, please visit chicago.gov/reopening. Also, BACP and the City of Chicago's Office of Emergency Management and Communications created Shy Biz Emergency Alerts. You can opt in to receive targeted emergency alerts for the business community. If you are interested, please visit chicago.gov/ShyBizAlerts. And once again, all websites that I mentioned will be posted in the chat box, so you'll be able to reference them. And we encourage our attendees to ask questions. Please use the chat box and send your questions to all panelists. There will be a question and answer session at the end of the presentation. And today's webinar will be Navigating Financial Resources for Your Small Business During COVID. It will be presented by the Women's Business Development Center and Fifth Third Bank. Welcome, Jessica and Lautika.
Thank you. Good afternoon, everyone. My name is Lautika Pai, and I'm the Managing Director of Access to Capital at the Women's Business Development Center. Founded 32 years ago in 1986, we are a nationally recognized leader in the field of economic development, and we're very proud to be an integral part of the small business ecosystem in Illinois and work closely with our partners to address the challenges confronting business owners throughout Chicago and the 9 states served with our Women Business Enterprise certification. In my role, I work with both startup and established business owners, helping them with their capital goals, and I also manage the growth of WBDC's Direct Loans Fund. And I'm presenting today with Jessica Redmond, who is a Senior Vice President at Fifth Third Bank. Jessica, I'll turn it over to you to introduce yourself.
Thanks so much, Lautika. I'm excited to be here this morning. Like Lautika mentioned, my name's Jessica Redmond. I serve as the Senior Vice President at Fifth Third Bank. I lead a team of bankers focused on serving privately held businesses, non-for-profits, and local municipalities in the Chicago community. For folks that aren't as familiar with Fifth Third Bank, we're a financial institution that has been around for over 160 years. Locally, we have just under 200 branches and approximately 3,000 colleagues that call Chicagoland and Northwest Indiana home. This past year, we joined with MB Financial, which brings over 100 years of service to the Chicagoland area. This expansion deepened our commitment to the region, and that commitment centered on a number of pillars, one of which is workforce development to meet the needs of small businesses. Here at Fifth Third, we know that the work that you're doing day in and day out, building your business, serving your customers, and creating jobs for the community is the foundation of the city. And I'm happy to be here today to go through this presentation with Lautika.
Thank you, Jessica. So During this presentation today, we encourage you to please use the chat feature of the webinar to post your questions. We have a lot of topics to cover today, and hopefully many of your questions will be answered, but we have set aside time at the end for a Q&A session. And we would also like to mention again that you will be provided a link with a recording of the webinar as well. So planning for recovery. Now, we all know that small business owners are used to dealing with the unexpected, right? But many have never actually been through a crisis like this pandemic before. So today we will be covering three broad topics: COVID response programs, small business resources, and best practices for accessing capital during these uncertain times. You know, small businesses need recovery and resilience support to weather the storm and actually come out stronger on the other side of it. And we hope the discussion today will help you think through adapting your existing business to the new economic situation that we find ourselves in. And we will also cover some small business recovery and resiliency related business and financial resources in the state of Illinois and the city of Chicago. So COVID response programs. The WBDC is an economic development organization. We are focused on entrepreneurship, and we host 3 small business development centers, and we are the only 2 women's business centers in the state of Illinois, a procurement technical assistance center, and we also run an international trade center. So we understand the importance of critical COVID response programs that have been rolled out to help our small business owner community. You know, we know this is a really hard time for small business owners, and the way we look at it is that this current epidemic-driven crisis in the consumer and service economy is actually very similar to a weather-driven crisis in the agriculture economy. You know, consider a tornado hitting a farm and the farmer loses this year's crop. You know, the soil of the farm, however, remains fundamentally healthy. And what that means is that farm is a fundamentally solvent business. So for 1 year, having, you know, lost this year's crop, the farmer has to survive. So what in effect that farmer is facing is a liquidity crisis. The land is healthy, his business is healthy, the farm is solvent, right? But for 1 year, you just have to make it through. And majority of small businesses entered this crisis as solvent businesses. They are viable long-term entities. So how do you think about cash and debt in good times and in bad times, right? Like, how do you think about maintaining liquidity over the next 12 to 24 months while the economy gradually reopens? We have, you know, had so many government programs, right? The CARES Act, the PPP loan program, the Economic Injury Disaster Loan Program. There have been state, city, and local government programs. And all of those have been rolled out to help small business owners bridge this liquidity crisis. It was to make sure that solvent businesses do not close their doors permanently. And, you know, we all know that PPP, for instance, was, you know, the rollout was fraught with issues, the rules were complex, and honestly, they were constantly changing. I can't tell you how many times we had to update our comprehensive guide to PPP loans presentation. You know, so if you are a business owner right now and you are asking the question, are loans right for you, right? Like, is taking on debt in such turbulent times actually right for you? And we are of the opinion that, you know, especially with the PPP loan, the way it was structured, even if you were uncertain about the loan being forgiven, if you're a fundamentally solvent business, it actually might have been optimal to take out a disaster loan to bridge this liquidity crisis that businesses faced. And, you know, what we saw with the second round of funding was that many small businesses actually hesitated to apply for the PPP loans. They thought there were going to be potential audits in the future. There was hesitancy due to these constantly changing rules. You know, CARES Act kind of expanded unemployment benefits and actually made it harder for employers to lure back workers to jobs. And many small businesses, to be perfectly honest, found the 75-25 rules, the original rules for forgiveness, to be very restrictive and very complex. But, you know, legislators heard the concerns, and the Flexibility Act was signed into law so that the goal was to ease many of the burdens placed on businesses that received these loans. And there were many changes. There were many significant changes to the loan forgiveness provisions. And I actually won't be digging into PPP loan forgiveness here because that's its own 1-hour webinar. And what I really wanted to do was summarize for you some of the key updates that were made to the forgiveness aspect of the PPP loans that if you were a borrower, you need to be aware of. There were relaxed payroll requirements. There was a forgiveness period extension. There were enhanced rehiring exemptions. There was a payroll tax deferral, a repayment deferral, and the program was, there was a program extension associated with it. So very briefly, as I'm sure many businesses who have applied for PPP loans and received them, who have received PPP loans are probably getting ready to prepare for the forgiveness portion of it. So applying for forgiveness is a very simple 3-step process. As a borrower, you apply for forgiveness with your lender. As a lender, they submit the forgiveness decision to the SBA, and finally the SBA approves and makes the payment. Now, there's some timelines in terms of, some milestones that you need to be aware of. As a borrower, you have up to 10 months after the end of the covered period, which is the end of this year, 12/31/2020, to apply for this forgiveness. The borrower completes and submits the loan forgiveness application to the lender, and as soon as the bank, the lender, receives the forgiveness application, they have about 60 days to submit the forgiveness decision to SBA. And then the clock starts again, and SBA has up to 90 days to remit forgiveness amounts to the lender. And any amount of loan that is not forgiven, it actually must be paid before the maturity date. So it's a very simple process and timeline. So real quick question for you, Jessica. Would love for you to share with our audience some insight on how Fifth Third Bank did with the PPP process and if the bank made any pandemic-related accommodations for their existing business banking clients.
Absolutely. Thanks so much, Lotika. I know in reviewing these past few slides, it's a bit triggering to revisit all of the changes that went through the PPP process along the way. But I am proud to mention that, Fifth Third really responded. I mentioned earlier that we've got a strong commitment to the small business community, and we were called to action amidst the pandemic to really use our power as an SBA lender to facilitate the PPP program. So we deployed just over $5.4 billion in PPP funds, and I believe about 80% of those loans were under $150,000. So we were really targeting our effort to make sure that those dollars got to those that were hardest hit across the spectrum of small businesses. In addition to PPP, which was part of our relief stage of our recovery effort in response to the pandemic, we did execute over 150,000 hardship requests. So a hardship request was the deferral of payments to allow borrowers breathing room to react and respond to COVID. And one final thing I'll mention is, again, in reaction to that initial relief response, we did contribute $1 million to the City of Chicago COVID Response Fund, which I know is a valuable resource that we might address a little bit later. But thanks so much, Lotika.
Yeah, no, that's great to hear. That's such a huge commitment from Fifth Third Bank. So, before we exit this section, I really want to touch base on something that's really important. The Small Business Administration also provides financial assistance beyond just, what was the PPP loans and the economic injury disaster loans. So currently, in effect, you have the SBA Express Bridge Loan Program where you can borrow up to $25,000 with very streamlined documentation. The only, guideline that was provided here really was you must have an existing relationship with an SBA Express lender, and the term loan can be no more than 7 years. And then you also have the SBA's, bread and butter, which is the 7A and the 504 loans. 7A is working capital with fixed asset and fixed asset financing loans. And then you have a 504 loans, which are property and capital equipment loans. The SBA also rolled out the Community Advantage Loan Pilot Program, which allows mission-based lenders, which is CDFIs, which are community development financial institutions, to actually assist small businesses in underserved markets with a maximum loan size of $250,000. And then finally, there's the SBA microloan program, which is making loans to nonprofit lending organizations to underserved markets. And these loans max out at $50,000, and the average loan size is between $14,000 to $20,000. So please keep in mind that as you are thinking about bridging this liquidity crunch for your business, please evaluate all the loan and grant opportunities that are being made available to you by state, city, and local governments. So what are the COVID-19 related business resources in Illinois? And this is like our second main topic of the day, which is a discussion on exactly this topic. To get your fair share of help, you need to be aware of resources that are available to you. You will have access to a recording of this presentation after the webinar. So, there are a lot of different resources that are out there. We won't cover every single one in detail since that would take too much time, but the recording is really meant for you as a reference. So I'm going to first kick it off with, what have we done in Illinois? So the city of Chicago, the state of Illinois, and Cook County created these emergency loan funds for small businesses in Illinois. And they did it very early in the pandemic. And they were actually able to get these loans out very quickly into the hands of small business owners at very favorable terms. So the city of Chicago had the Small Business Relief Fund for small businesses that were located in the city of Chicago. The state of Illinois similarly had the Emergency Loan Fund, where priority was given to businesses located outside the city of Chicago. And then Cook County, a Community Recovery Fund, was for businesses located in Cook County, which were outside of the city of Chicago, so in suburban Cook County. And that program is actually in its final stages right now, and it wraps up mid-November. So the Cook County program was about a $10 million loan fund, and these were 0% interest rate loans with 3 to 5 year terms. So that is in its final stages right now. Then in terms of what is open, so we have these emergency grant programs for small businesses in Illinois. So the city of Chicago launched 2 programs. Both of them have wrapped up. The first one was the Micro Business Recovery Grant Program. Again, through this program, about 959 micro businesses from across 36 low and moderate income communities received grants just 1 week after the applications closed for the program. So there was really the speed and urgency that the city took upon itself to get this money in the hands of small business owners. Then we had the Together Now grant program, which was a $15 million pool of funds. And that, again, was an incredibly successful program that kind of wrapped up end of August. And these grant funds were really used to help small business owners that experienced not only economic distress, but also experienced damage due to the civil unrest that the city saw. And then the program that is currently in progress right now, which is huge, is the state of Illinois' business interruption grant. So what the state of Illinois did was they did 2 rounds of this grant. Round 1 wrapped up in August, end of August, and that was really, $49 million in grants that were awarded to about 2,800 businesses, and the individual grant amounts were anywhere between $10,000 to $20,000. Now, what is interesting right now is round 2 of the business interruption grants, which is actually in process. These are over $200 million in grant funds. The application window is still open. If you are a business that has been impacted and are experiencing economic distress due to COVID-19 in 2020, please apply. The application window is still open. The WBDC, so the Women's Business Development Center, is one of the grant administrators alongside Axion. And, the review process is occurring smoothly. It's happening fast. Already more than $46 million has been dispersed to this program. So it's a rolling cycle. As the approvals are going through, the money is also being automatically dispersed. And all businesses are welcome to apply. There's a very clear eligibility guideline that has been provided. So I would highly encourage you, if you are suffering economic distress, please do apply for these grants. These grants are much bigger in size. They are between $5,000 all the way up to $150,000 in grant capital that could be provided to small business owners depending upon the severity of your economic distress. Then we have the Cook County COVID-19 Recovery Program, which is the small business assistance grant for small businesses in suburban Cook County. This is a $12.6 million grant fund. And, there is a potential. So this is actually wrapping up between this week and next week. And the grant funds should be fully dispersed by mid-November. But there is a potential for a second round of funding to open up. So please stay tuned for that one as well. That particular grant fund is solely focused on businesses in suburban Cook County. And, all of COVID-19 Illinois-specific government resources can be found at these links. We have the, DCEO, which is the Illinois Department of Commerce and Economic Opportunity. DCEO is working very diligently to secure access to helpful resources for small businesses throughout the state of Illinois. And at these two links that are provided here, so one is coronavirus.illinois.gov, and the other one, you can just search for DCEO, Illinois Gov, COVID-19, and it pulls up this page. And they have done a fantastic job of compiling all helpful links for COVID-19 resources. And it includes all the details that you need to know about the business interruption grant round that is currently in progress. And, it's the lowest cost of capital that is available to small business owners right now. So I would highly encourage you to apply for it. Then you have, BACP, the City of Chicago's Business Affairs and Consumer Protection, is working very closely with Chicago Department of Public Health. So if there is updated guidance that business owners need to be aware of as it relates to their business, consumers, employees affected by this crisis, they post updates there very frequently. And also BACP provides a number of programs and resources to support small businesses on all steps of their entrepreneurial journey, especially relevant during this pandemic. And, from their entrepreneur certificate program to small business expos to business education like we're doing today, there's a whole lot more. It's all categorized, there are links for it. So please look at BACP's website listed here to get access to those resources. And finally, you have the Cook County Community Recovery Initiative, which is this rapid response initiative aiming to provide, equitable financial relief and critical support services for suburban Cook County residents and small business owners as they're trying to rebound from the impact of the COVID-19 pandemic. And all of those resources are listed here. So, what we did at the WBDC, because, on our website, wbdc.org/COVID-19, we have details on all loan and grant programs that are accessible to you. And we have also captured all tax and unemployment benefit related resources on a single page. We are an economic development not-for-profit organization, and we try to help small business owners in the state of Illinois through one-on-one counseling sessions, group sessions, cohort-based programming, assistance with government contracting, and all our services are free. And what we try to do is keep our network updated with everything that is accessible to them right now. So we have different buckets under which you can access resources. So you have the federal disaster grants and loans, the emergency loan and grant programs by state, since state, city, and local governments have stepped up in a significant way to launch these programs for small business owners with really attractive terms. And then the WBDC has its own direct lending program. However, that is restricted only for the state of Illinois. We support small and micro businesses in low to moderate income communities through our direct lending program. And then the grants. So these are not government grants. These are funders from across the country who are extending opportunities for small and micro businesses who are looking to seek grant aid. So the various grant programs that different organizations have offered, like whether it's Facebook or Google, we try to keep this updated and listed. Then the next bucket is really tax benefits, to highlight what steps the federal government has taken to give small businesses a reprieve. Taxes can be really tough for small businesses, like during the best of times, and they are much more daunting now than ever. And then the final bucket is unemployment benefits. So the CARES Act, they provided three very important expansions to unemployment. And while these expansions are federal programs, they are all administered through states. So links to individual state rules and offices have been provided. So again, the website is wbdc.org/COVID-19. And, these 6 major buckets of how we have sorted all the different programs are all accessible to you at this particular link.
Lotica, I'm going to drop that. I'm going to drop that email, the web address in the chat box, because I wanted to call this out. It's something that I provide to my clients pretty regularly. It's a very robust and extensive list that, again, is updated pretty regularly, as Lotica mentioned. So if you have a moment to check that out in the chat and save that or bookmark it, I encourage you to do so.
Thank you, Jessica. And I saw that BACP has actually also provided links to the Tri-Biz alerts and their business licensing, the online processing of business licensing, which is all so very important right now. To stay a sustainable and compliant businesses, you need to have so many of these foundational aspects of your business correct, because if you don't, it limits your opportunities to accessing so many of these grant and loan programs that are being made available by the government to you, because these are foundational building blocks, and you need to have them in place. So if you need a business license that needs to be renewed, or you need to apply for one, I would highly encourage you to do that because it otherwise slows processing down for a lot of capital providers and grant administrators. So, and that brings us to the portion of our presentation where we discuss best practices for accessing capital, which is so very critical for small business success. So I'm going to actually kick this off by talking about what it means to adjust expectations. We all know that shutting off the economy is not like, switching off the lights in your house, right? The economy will not return to its pre-pandemic productivity for some time. So in the news yesterday, Governor Pritzker said that a number of hospitalizations in Illinois has more than doubled in less than 5 weeks. There are new state-mandated restrictions. This is a lot. We will have a long, hard road to economic recovery ahead of us. And while the short-term outlook for small businesses, it varies greatly by industry, I think it's important to consider what recovery will look like once the economy begins to return to a state of normalcy. And you would have to adjust expectations. And our recommendation to do is to kind of do that adjusting of expectations in a very measured and financially prudent way. So we put together this very, concise roadmap to guide you. Step one really is to assess your financial damage. The step one is, in developing a rebuilding plan, is determining how deeply your business was affected. So if you haven't updated your financial statements like profit and loss or cash flow statements recently, it's really helpful to do that now. And you can compare them to last year's numbers to see how much your business may be down, and then consider other ways in which your business has been affected. For example, did you lay off some or all of your employees? You need to factor that into your rebuilding plan. If you've cut your advertising and marketing budget, you may need to figure out how do you align that with this new reality of having to do so much online. Or maybe some of your customers have migrated towards competitors. All of these things are things that you need to account for as you plan your recovery efforts. Second step is to take a second look at your business plan. Specifically, you may need to consider how your business is adjusting to a new normal. For example, if you previously relied on foot traffic, for instance, to a brick and mortar location for sales, you may need to look at digital expansion to accommodate the higher number of people who are shopping from home. So when you go over your business plan, look at what was working before. That may not work as well now, and see where you can adjust to improve or remain competitive. And then the third step would be to consider whether you need funding to recover. So unless you had a really large amount of cash on hand going into the pandemic, it's very likely that you may need some working capital to jumpstart your business operations coming out of it. So if you are considering financing to help rebuild, keep in mind that borrowing from traditional banks will be competitive, as lenders want some reassurance that loans can be repaid. And we'll talk about that, what lenders are looking for. But, in the meantime, don't forget to look at these federal, state, and city programs that can help provide you with the Band-Aid solution, the short-term Band-Aid solution to address your immediate liquidity crunch. And the fourth and the final step in my mind is, you have to think about revamping your budget to account for new spending. So assess your financial budget, step 1, and then by the time you get to step 4, you have to figure out how much you need to spend. So coming out of this pandemic, you may need to spend money before you can actually make money. If there are increased health and safety regulations, you might have to make adjustments for social distancing carryover or PPE gear. If you need to hire and train new employees, do you have to purchase new inventory? So are you incorporating into your plans efficiencies around increased hygiene requirements, remote working processes? Do you need to trim your overhead? Do you need to renegotiate your payment terms with your vendors? Do you need to get access to a line of credit with a bank? Do you need to address, links in your supply chain? There's so much that needs to be planned as we emerge from this public health crisis. And it's really important we think about this in a financially prudent way, because small businesses at the end of the day are critical to the economy, and they're so critical for our communities. So Jessica, would love for you to talk a little bit, kind of walk us through what you see as concerns being highlighted to you by banking clients during these uncertain times.
Yeah, absolutely. Thanks, Lotika. I think, and reflecting on this past year, something that I found that was quite interesting in the conversations that we've had with our clients ahead of the pandemic, the key issues that many identified were the availability of labor. And many of our clients responded to that by working towards automation or other avenues. Secondly, I think the trade war was top of mind ahead of the pandemic. And what were our clients doing in response to that? Many were looking to identify alternate sources to procure materials. And then finally, I call out technology here. I think that's always top of mind for businesses. But ahead of, the pandemic, many of our clients were expressing a desire to update an e-commerce platform or navigating cybersecurity issues. So what I find interesting about these three key issues is that they were really laying the groundwork in a lot of ways to that pandemic response. How can we operate without labor? How can we procure materials through different channels? How can I shift to a new platform? All of these questions our clients faced early in 2020, but with greater urgency in March. So on that third point, how can I shift to a new platform? Lotica, I'm sure you've seen it too. It's just remarkable the level of innovation that our clients have demonstrated. We've seen clients that were typically B2B pivoting abruptly to B2C when the consumer distribution channel was overwhelmed. So to address these issues and others, it required businesses to pivot quickly. As you outlined previously, important items to consider in that process of pivoting. There's many variables, but one that I suspect many of you are in attendance for is specifically capital. So I'm hoping that, what we're covering today better prepares you for the pursuit of that capital. And as we move to the next slide, I think, another important item, again, on the next slide is to step back and get back to the basics. So formulate a plan, communicate that plan, and take action. One of the basics that I like to guide small businesses on is knowing who your trusted advisors are. Who are you leaning on when you're making a financial decision, when you're shifting strategy? This can be a formal board or it could be other partnerships. In my industry, trusted advisors typically refer to your banking partner, investors, accountant, lawyer, or others, again, that you rely on for input for financial decisions. But others, that are important to think about might be associations or vendors. And once you have those critical contacts identified, again, I think communication and the engagement plan with those individuals is critical. And before we move on, from your network, I do think, it's important to call out some other resources that might be more general in nature. Being in the city of Chicago, we have enormous access to really valuable business incubators. So I'm thinking about like an M-Hub or the Hatchery or 1871, just to name a few. These are really great resources for information and for advocacy for small businesses. Another one that's not always top of mind would be local higher education institutions. For instance, the Polsky Center, that's part of the University of Chicago, deploys excellent and accessible programming. Similarly, the Baumhart Center at Loyola. So these are great centers for thought leadership. Just wanted to make sure that I made mention of them as we're going back, back to the basics. Gaining that knowledge like you're doing today, I think is an important and ongoing step that you should do as you're navigating any business challenge. And then perhaps even more back to the basics on the next slide, we have, the importance of knowing your why. What is your why? How does your response plan support that why? If you haven't seen the wildly popular Simon Sinek TED Talk for understanding the purpose of your business, this why, is critical to your communication plan with your trusted advisors. It's important framework to keep in any decision that you're making to pivot or pursue, new distribution channels, anything that's coming up in your plan to deploy capital, how you're planning to deploy that. Revisit your why, go back to that foundation. So on the point of, obtaining capital, I think, Lotica, we have a few slides that are on the horizon just to start, those wheels turning. Knowing what you're working towards is essential. Knowing what you need this capital for, that's imperative in your communications with your capital providers, with your banking partners. So again, moving through those next few slides, what do you need capital for?
Yeah.
Do you need to hire? Go.
Yeah, that's so important. You're absolutely right. So let me just forward it. Yeah.
So do you need to hire new people? Again, what's the use of those funds? Enhancing e-commerce capabilities, building out your digital marketing platform.
Yeah, I think with enhancing e-commerce capabilities, Jessica, what we are seeing is that so many businesses need to do that right now. They are, everyone is going into contactless pay. If you have a brick and mortar store, with the way our customer profiles are changing, people are shopping from home. Coronavirus has impacted consumer behavior so deeply that we have found that there's a whole new customer that has been created. They're almost like 4 types of customer profiles that we expect going forward. Depending on how people are reacting to COVID-19, the first group of customers is who are going to want to still stay at home even after some of the stay-at-home orders are lifting. So if they are going to limit going outside, how are you as a small business owner going to address the need for your product or service? And the second group of people is, they're really ready to go out. They're eager to go out, but they want to be assured of their safety. So as a small business owner, you need to think about how you can address their safety needs. And the third group of people is they're going to continue to work from home for a long time, even after these restrictions are lifted. Their families are at home. So it's actually really hard for them to transition between work time and playtime. So this will actually really impact how they shop, what they shop for, and where they're shopping. And their needs are going to be different from their pre-COVID-19 days. And a lot of it is trending towards being online. And that's why e-commerce capabilities are, so important. And the fourth and the final group of customers in my mind are people and businesses who are actually suffering economically. So we expect that the psychological trauma of the coronavirus pandemic will persist for some time. But added to that, there is this economic trauma that is going to have a longer hangover because some of the customers, your customers may have lost their jobs. So many businesses have sadly shut down. Their spending is going to be down. So, you're going to see a lot of businesses and people are going to have lower discretionary spending and they're going to pinch pennies. So when you think about your digital marketing platforms, then how are you going to talk to them? How are you going to reach these 4 new customer profiles that have been created towards because of this pandemic? Consumer behavior has changed in a very meaningful way in the past 7 months. So this is something small businesses have to think about. Are you going to build out your digital marketing platform? And then, when you talk about digital marketing, it's not just about building out the platform. You actually have to spend on that platform to gain eyeballs, which is to get customers, potential customers, to even look at what you're selling. So that means, do you have to increase your online advertising spend, which I think is really, really something that you have to consider as a small business owner, because that money can go really fast and you have to plan for it. And, this is to Jessica's point earlier. Do you need to rethink your supply chain? And, going back to what she mentioned about what their customers are seeing, and the trade war is something, wasn't that of concern even before the pandemic? And it's just been exacerbated right now. And that takes money, if you're rethinking your supply chain, where you're getting your raw materials from, how you're shipping to your end customer, it takes money to rejigger and rethink all of that. So is that something you need to spend your money on? And then, and I think this is actually really, really important. Coronavirus has changed a lot for us. So are you thinking about pivoting your business model? And Jessica, do you have any comments on this about pivoting your business model? Does the bank look at business model pivots a little bit differently than, say, working capital loans?
Yeah, absolutely. I think it's something that we see in normal times, but absolutely even more commonplace today. We'll go into it a little bit further in how banks approach any sort of decision as it comes to the extension of additional capital or debt. But I think what, some of the core points that we're looking for is this funding going to, one, support losses or support growth? And so when you're looking to pivot your business model, absolutely identifying that is essential, especially in a moment like now that we find ourselves in, where there are shortages in cash flow as a result of the pandemic. So yes, going back to your why, planning for your business model and for that business plan that supports that pivot, whether it's the deployment, like Lotica mentioned, of new e-commerce strategy, or the deployment of advertising, funds and dollars. It can be more difficult to finance something that doesn't have have collateral, and I think it's good to lead into the next slide here as well, or in the next few slides when we touch on that criteria for how a bank reviews a financing request.
Yeah, no, that's fair. So, what I want small businesses to think about, this is like my ideal wish list. Here's your why. You've gone through this exercise of identifying what you need this money for. And here's your why as you go through this exercise. This is the vision for your business. Kind of lay it out like this and think about, like, in 2 months, 6 months, 12 months, where will you be? In the sales bucket, do you plan to acquire more customers, or do you plan to be certified? In marketing, do you need to create and improve your website? Do you want to appear in local media? So what are your choices? What are you trying to do? And then your finances, are you trying to solve a current problem that your business is experiencing? Or are you trying to obtain money? And then your operations and management, are you looking to hire more people? Do you have a plan to retain employees? So get your whys together and lay a plan out. This is the vision for your business for which you may need capital. And I think bankers love it when you're prepared and you're ready to answer these questions right off the bat.
Absolutely.
Yeah. So, there are different, and now we're really going to jump into what you should know before you ask for all this money. So the first thing you need to consider is, do you need your money now, or do you want your money later? And different financing needs exist for different stages of businesses. So if you're just an idea on a piece of paper, that's your pre-venture seed money. And that is something that, typically is funded by friends and family capital. That's usually what we call an equity round of funding, where the business owner puts a little bit of their own money in to start a business, or you're part of some incubator or an accelerator program that provides you with this initial pre-venture seed funding. Then, a startup for us is, you've been in business for about between 1 to 2 years. You need this little bit of infusion of capital to start to grow, right? You're just a little sapling and you're just starting to grow. And, the WBDC provides funding for, a lot of microfunders provide funding for this initial phase. The growth, expansion, and mature phase is where larger financial institutions play a much bigger role. So this growth funding is when you have a vision for your business, you're looking to step into new markets, you have contracts in place, and you're looking to execute on them. So that's your growing. There's this exuberance that is associated with your business at that time. Then you have the expansion phase where you've reached the state, you build a business, you have a brand recognition, you've kind of in this process of consolidating your presence in the market, and you're expanding and you're getting the word out there. And then, you grow and you reach a plateau and you're mature. And that's a different stage in the life of a business where a lot of business owners start thinking about succession planning. They start thinking about selling their business and exit opportunities. So the different financing needs for different stages in a business. And it's very important to recognize and understand exactly where on the spectrum your small business falls, and that will help you determine what kind of capital is appropriate and accessible to you. So that takes us to the biggest piece of discussion, which is, what you should know before you ask for money. These are the 5 C's of credit. Every single financial institution that lends looks at the 5 C's of credit. Like, this is a tiny little, reference thing that is always back of mind when we are talking to a potential loan client. And we'll go through this sequentially. I'll give you a break an overview, and then Jessica would love for you to chime in and provide your, insight from a bank's perspective. So we start out with character. Credit plays a very significant role, and I'm going to break out credit again after this slide, but it plays a really significant role. The borrower's reputation and credit history plays a role in how you access capital. Do you have previous experience in the industry? It's kind of us asking you for your resume. Like, how do you have the reputation and the experience to actually build a business sustainably and in a compliant manner in the industry that you have chosen? And then, there's capital. Like, we would love to know what the borrower's personal investment in the business has been. What is your skin in the game? That how much of your own money have you invested in this business? You want to track this as a small business owner because it helps us evaluate your equity in the business. Our recommendation is, if you're writing your business a check from your personal account, you'll have a record of how much you've infused into this business. Keep track of it. And it's really important because bankers love to see how much skin in the game you have in building your business. And then you have, capacity. It's your global cash flow. We will look at both your personal income and your business revenue and your sales to determine how much debt can you support and whether or not you can pay the loan back. So capacity is all about determining the borrower's ability to repay the loan based on their current income and existing debt that they have. And then you have collateral. Like, if the business can no longer pay back the loan, what assets can a lending institution use as security? Because this is a loan. This is not a grant, right? Like, there is an expectation that institutions have that they will be repaid so that they can lend to someone else. And the banks want to evaluate assets which are used to secure the loan. Banks don't want stuff. They want assets that can be used as security. And this is negotiable to some extent. And, that's why the importance of transparency and building relationships with your business banker is so important. And then conditions, market conditions are important. Competitions, please be planned, prepare a business plan because you will be asked for one. And the overall state of the economy and the environment, and specifically factors that could impact your business, are taken into consideration here. And there are years when certain markets are trending and certain businesses are booming, and there's a lot of interest in providing loans to those businesses. And due to some regulatory changes and oversight, there may be some years where certain businesses or industries have dampened response. So you just need to be aware of that. So Jessica, would love your thoughts on the 5 C's of credit here.
Yeah, absolutely. I think you've covered it so well. I would add and highlight something you mentioned occasionally throughout the presentation is the importance of communication. So I'd make that, a 6th C in this sense, because there are so many important variables that could flow in and out of each of these different points that could be critical for your capital provider to understand and help explore exceptions or solutions or bring the right resources to you. I would also be happy to speak to personal credit on the next slide as well. I think Lotika did a great job calling out the importance of character and how credit history plays into that. I think one of the questions our clients typically approach us with is, why is my guarantee required? And why is my credit score important? And I like to draw parallels to your credit score and the process of applying for a loan in a similar fashion to applying for a job. So when you're just out of college, on your resume, you're going to put your GPA. That's exactly what your credit score is to a large degree when you're applying for a loan. It's the equivalent of your credit score. We're paying attention to those other variables as well, your reputation, your experience in the industry, the weight of your plan. But that credit score is imperative. So making sure that you're paying attention to what your credit score is critical for you individually, but also as it relates to the business. And then I'll also touch on, the importance of personal guarantees. I think this is especially important for, for-profit small businesses. Oftentimes, those records can kind of mesh or blend into your personal finances. So having that separation of business and personal is essential from a record-keeping perspective, but we also recognize that, you're doing a lot of hard work and you're going to want to take out profits when those are recognized. When a bank is lending to a borrower, we need to ensure that those funds are recovered, that we're going to be able to make this loan and get repaid. If funds aren't being retained in the business, then we need to find and identify a path to support that loan and to know and have confidence in that repayment ability. So that's one variable. And again, these are my personal views here. This is, conversation that I have with my clients that don't reflect necessarily the perspective of the bank, but they are certainly, how I approach the concept of personal guarantees. That could also give you a line of sight into how a bank is viewing that. The other thing that I'll call out is, Lotica touched on how collateral is an important consideration to lenders. Having that personal guarantee also ties some level of interest for the individual that's guaranteeing the loan to help a lender recover any losses. So we don't make loans with the intention of running your business in any way. We're always looking towards that growth and to support the longevity of the business. But if something goes awry, we want to make sure that we have your vested interest in helping us recover our position. And so that's where that personal guarantee is also helpful. And, you helping us navigate that collateral if that should come, but also keeping the bank's interest in line with your interest, which, I like to say our interests are in line. We always want the success of a business, and we want that. We don't want to find ourselves in that situation to any degree ever.
Yeah.
Lotica, is there anything you want to add there?
Yeah, no, that's such a good point. I just want to reiterate for everyone that personal credit very, very closely overlaps with small business credit. So don't ignore it. Make sure that you're aware at all times what your credit score is. And, and if it is not where it needs to be, what are the different things you can do to bring it up? Now, as we approach this medium-term time frame of economic recovery, a lot of small businesses are going to be looking at traditional financial institutions to access what I call non-disaster financing. So a FICO credit score is one of the primary gatekeepers used by the bank. And I actually think there's some benefits to that because, one, it tries to make the lending process more objective and ensures some sort of consistent credit decisions. And it also, I think lowers some of the cost of processing for small dollar loans. I think it's really, really important to know what your credit score is, know what drives a FICO score, your utilization, your slow pays, how many inquiries you have on your credit, and then whether you have collections or bankruptcy, so know what drives your score. And just be aware that these are very, very closely intertwined together. And, I really want to talk a little bit about conventional bank financing. This is such a good segue into this because what this pandemic has made abundantly clear to us at the Women's Business Development Center is that while small businesses had the most to lose in a disaster, they were not that prepared when the pandemic hit. And so many of the businesses who we helped get access to PPP loans or apply for these grant programs and loan programs, they were really underprepared with their finances. So I cannot emphasize enough how important it is to be well prepared with your business finances when you're trying to access loans. Jessica, I would love to get your views on what are the basic key underwriting considerations for conventional bank loans?
Yeah, absolutely. And I think those 5 C's were a great segue into this portion of the presentation. I think, again, if your plan is to pivot, and assuming your plan has a capital need, I think it's important to understand how a bank would contemplate that financing. I think it's relevant. Your slide earlier too, Lotika, is what's the ideal stage of a company's life cycle to obtain financing, and it certainly hovers between that expansion phase into the mature phase. What's driving some of that is the regulatory oversight of banks that impacts the parameters by which we can lend. So a bank's required to demonstrate that the borrower can repay the current and future obligations. We're often evaluating this by applying any upcoming or proposed debt service against the historical cash flows of a company. So that's where, again, your ability to repay is essential. What does cash flow look like from a historical basis and then a forward-looking? Obviously, forward-looking is very complicated in normal times and even more so now, but there are burdens that we have to point to the anticipation of that repayment. So when you're looking at the cash flow of your company, it's helpful to do some exercises of what could go wrong and how could that impact my cash flow, because your bank will be doing the same on their end. So in addition to cash flow, banks are looking at the strength of a balance sheet, paying close attention to liquidity, assets, particularly unencumbered assets such as real estate, accounts receivable, inventory. Unencumbered means that those assets are not pledged to any other capital provider. And then we're also considering how much leverage, exists before and after additional debt is taken on. The goal, again, to some earlier points, is solvency. We want to make sure that there's strength in the business ahead of adding additional capital onto the company. So will this additional capital solve my problem? Will it impact the business? How will it impact the business in the long term? Does it align with the purpose of the company? Doing a deep dive into the underlying collateral of a loan, for instance, a bank provides a mortgage against a property. Our borrowings are limited to guideline loan-to-values against an appraisal. So we recognize that some of these guidelines, some of these regulatory hurdles can impact the way that we're offering a full solution. As such, we really strive to close that gap by leaning on partnerships. So as we move to the next slide, we're really working to close that traditional lending gap through partnerships and the funding of providers like WBDC, IFF, Axion, and others. We realize that we can't always directly meet the needs of the community, and we rely on partners to meet in a relevant way. I mean, you've heard from Lotika, and I think WBDC is an excellent example of a non-bank institution that does incredible work to efficiently deploy capital and pairing that capital with relevant and critical technical support. Another example of a valuable partnership that I want to call out, as it might be helpful to some of the attendees, is our support of the Chicago Entrepreneurs of Color Fund. So Fifth Third Bank, JP Morgan Chase, and others partner together with Axion and LISC to provide a fund for Black entrepreneurs in the Chicago South and West Side neighborhoods to gain access to affordable working capital, training, and technical resources. Eligible Black-owned businesses that are also in the startup phase or already in existing status are eligible. And Axion will use those funds to deploy loan capital up to $100,000, and while LISC will provide loans between $100,000 and $500,000. So this capital encourages the revitalization of these and other underserved neighborhoods through the commercial and small business development. So thanks for allowing me an opportunity to share some of the capital provider partnerships that we have. And again, WBDC is doing incredible work, and can't thank Lotika enough for her work in getting these materials together and sharing her thoughts and expertise on this call.
Jessica, just the importance of working together in the financing ecosystem in Chicago, that cannot be underscored enough. And, honestly, Fifth Third is doing such an amazing job. And, there's so many questions, however, that a small business owner needs to be prepared with, right? When they're thinking about starting to work with a business banker, what type of financing do do you want? How, we've alluded to some of this. What do you need the money for? How quickly you need the money? What is the current financial health? And there's just so many little bits and pieces of it. But would love your perspective, Jessica, since, you've been involved on the commercial banking side for so long at Fifth Third Bank, is what are your perspectives on the basics of bank financing?
Yes, absolutely. I can certainly speak to, again, my opinion of bank financing, not necessarily the views of the bank, but when I'm working with clients to navigate whether taking on debt and what form of debt is the appropriate resource for that company, I'm thinking about the underlying need. I'm thinking about the underlying purpose of the company, where they're going, where they're headed, and what this capital will do for them. We're likely tying that financing need to the underlying asset that it's creating. So if you think about a project, if there's the acquisition of space, we would be tying that property and the life of that property to a mortgage loan. So we wouldn't, for instance, in a traditional way, have a real estate loan that's tied to a short-term maturity or a short-term, term as it begins with. So we're looking to pair the assets and the use with the appropriate type of financing. We talked about technology and the move to different e-commerce platforms. We realize that there's capital needs in that process, and oftentimes we're consulting with clients on whether leasing is the appropriate approach, or if bank term financing is the appropriate approach. If it is a bank term loan, we're looking at what's the life of that technology investment, how long is it relevant, and how long is it useful, because we would want to tie the term of that loan to that equivalent lifespan. Similarly, working capital. I think a lot of our clients don't necessarily understand the ins and outs of working capital ahead of a revolving line of credit request. We're looking to, the underlying need when a request comes, and if that request is for working capital, the need to acquire inventory because you're looking to grow. You've got a new contract, for instance, and that's going to translate to an increase in accounts receivable and the need to ramp up inventory. So long, again, as that business is solvent at the beginning of this new endeavor, looking to pair that need with the appropriate form of financing. In this instance, we're often turning to a revolving line of credit. Revolving is the key component there, because when you're tying short-term working capital financing to that act of working capital, it's moving. Your inventory is moving, your accounts receivables are moving, so you're going to want to see that line of credit cycle and recycle, just like you would with your own personal credit cards. You're going to want to see those balances revolve if you're going to pay down. They're not going to always have some consistent balance when handled appropriately. So those are some considerations that I would touch on. But I think, another point to really highlight would be just the importance of record keeping. I think we're all learning this in the PPP process together, is how critical the clarity of your financial condition, how well you know your numbers, and how well that is translating into pristine record keeping. I really encourage you to lean on your trusted advisors to make sure that you have the resources to give you the ability to know your numbers, to know where you stand, and that is essential in knowing where you're headed. I know there's plenty of questions here, Lodika. I'm sure you want to touch on a few of them, but I also want to make sure that we're reserving time to address questions from the audience as well. So is there anything else on this that you'd like me to speak to in particular?
No, I think we've kind of covered most of the basics of bank financing and how to access credit. How do you access credit with traditional banks and even with just microlenders? So I just kind of want to cover maybe one other topic, and then we'll wrap it up and just open it up for Q&A. So
Absolutely.
One of the things I think is really important that all of us should think about is, debt can be a business's best friend if you use it correctly, because, a business loan allows you to leverage your profits and balance uneven cash flows. And taking on debt, like, Jessica alluded to, oftentimes assures the ongoing operations of the business and it supports its growth. However, debt management and cash flow management are absolutely inseparable. And that's where record keeping and knowing your numbers really comes into play, because a poorly managed cash flow will eventually deplete your working capital, and it will, at the end of the day, hinder your ability to pay off your debt. So the goal of any small business owner with debt on their books should be to manage their cash flows to, over time, minimize their debt load and generate higher profits. I always believe the right debt at the right time, under the right terms, and from the right source can be a very powerful tool. But if it is mismanaged, it can cause irreparable damage. So debt provides opportunities for improved cash flow and growth for small businesses, and is oftentimes actually a better option than trying to find an equity investor to fund growth. However, debt needs to be managed, or it can even, it can be very harmful otherwise. And managing debt is so critical, and you as a small business owner, you need to know at any given point of time exactly how much you owe to which lender and at what rates. And, regardless of how you choose to manage your debt, you must start with a realistic picture of your debt, your current and projected revenue streams and assets, and that will help you make the best possible decisions. So I always have this little 3-step thing in my mind when I think about different ways, especially during this pandemic, how businesses should think about managing their business debt. If you're in a position where you need to prioritize which debt you need to pay off, pay down the highest interest rate loans first. Reprioritize your repayments by seniority of the debt and the interest rate, because it's hard, right? Because failing to repay a debt can trigger bankruptcy. So in a crisis, everything is negotiable. So negotiate. You may need to still follow some debt covenants, but be transparent with your business banker. Have a conversation with them. Maybe you can get a reprieve for a month, or have, some accommodations, like Fifth Third had already, Jessica alluded to it. She mentioned it earlier, how the accommodations that they made for their existing clients, how favorable they were at the beginning of this pandemic. So have a conversation and rank in decreasing order of necessity. Repay debt essential for your survival first, and then go down the list. And if two debt buckets are of equal necessity, repay the higher interest rate one first. It's very important, again, to keep your creditors informed. Transparency, openness, and an advance notice, it goes a long way in building trust. And then I think cutting costs so that funds can be channeled to debt repayment. So maybe you have to downsize, maybe you have to sell unused or underutilized equipment. Maybe there are some operational efficiencies that can be introduced to save money. And these are things business owners need to think about. And the management, finally, of your cash and debt on your balance sheet is not independent of each other. So as a small business owner, if you're struggling to maintain liquidity, your current goal really should be to decrease your net working capital. That's net of cash. So what I mean by that is decrease your other current assets. So maybe decrease your current accounts receivables. Reach out to people who owe you money and see if you can, get them to pay you quicker. Increase your current accounts payable. So, an accounts payable is like a debt instrument, right? So basically, it's like increasing accounts payable is like you getting a short-term loan from your supplier. So if you can do it, think about it. And if it's optimal to do so, do it. Solvency is key here. Right now, there is the opportunity cost of capital, especially for so many of these government loan programs, is so low. But again, at the end of the day, you have to remember debt is something that needs to be paid back, and debt management and cash flow management are absolutely inseparable. And, you need to recognize that and have that managerial discipline to plan for the repayments accordingly. So, this is something that I can't stress enough on. And then I want to close out with 2 slides. One is just a warning about alternative online lenders, because not all lenders are created equal, and they're definitely not even regulated equally. And online lending is very largely an unregulated space. So what we have found that, especially in a time of a crisis, these lenders target small business owners, they mask their true rates, they offer very quick cash for, very little more than a bank account number in return. So beware. And many of these are predatory in nature and are like payday lenders for small businesses. So please beware, please be aware of them, and go to a trusted source to lend money, because debt is debt. It needs to be repaid back. And you really need to avoid getting into quicksand where it's really hard to get yourself out of. And then the final slide that I want to close on before we jump into questions is know your rights. Your rights as a small business owner seeking capital include the right to transparent pricing and terms, the right to non-abusive products, the right to responsible underwriting, the right to fair treatment from brokers, the right to inclusive credit access, and the right to fair collection practices. So please be aware of your rights as well. Know what questions you need to ask. And again, can't stress enough, build relationships with your business bankers, because that is so important as you move forward into thinking about accessing non-disaster related financing for your small business as you're emerging from this COVID-related health crisis that we all find ourselves in right now. And that takes us to the Q&A portion of the presentation.
Great. Thank you both so much for that in-depth information about financing your business, all the different resources. I hope it was very helpful to our attendees. And we did have some questions come in. First question is, who are the SBA Express lenders that you must have a relationship with for the SBA Express Bridge Loan Program?
So you can actually go to the SBA website. So you'll have access to this webinar. There's a link there, and it lists out who the existing Express loan lenders are. And if you already have an existing relationship with them, that means you already bank with them. I think that's what the SBA means, is that you need to have an existing business banking relationship with an SBA Express lender. So these are traditional financial institutions.
Hi there. Sorry, I was on mute. This is Jessica. I would like to add to that. I think it might be confusing for some of the participants to recognize the importance of that existing relationship. Much of that has to do with reducing fraud. And again, this is my interpretation of it as well, not necessarily the bank's view. But when you have a relationship with an SBA lender, it's much more seamless for the SBA to deploy that capital as well, because we've already verified you. We have your KYC, your know your customer information, and that's really imperative. And a lot of these, federal programs is to ensure that compliance mark is met. So I wanted to call that out and also highlight that, at Fifth Third, we're proud to be an SBA lender as well. So if anyone has additional questions on that, feel free to reach out to me directly, and we can get you in touch with the right people at the bank as well.
Great, thank you. And just a quick note, we've had a couple questions about the Chicago Hospitality Grant Program. Mayor Lightfoot announced this grant program yesterday, and it is emergency relief package for restaurant bars and their employees, those who have face significant challenges due to COVID-19. The application is not yet available and will be released the week of November 16th, and details such as eligibility requirements are not yet formalized. However, if you do want to get some details, you can just go to the city's website of chicago.gov, and in the middle of the page, there's news releases, and it's the first one that says Mayor Lightfoot announces $10 million grant Chicago Hospitality Grant Program. This information was just released yesterday, so you could kind of read through the press release and get a little bit of information. I will say that we will be hosting webinars about that grant program, so stay tuned and check back on our website. I'll put both of those websites in the chat so you can reference that.
May I add something to that? Because I feel there was one question that I thought was very interesting. You know, people are applying for loans, so the PPP loans and a grant, right, through the Big One or the Big Two program. Maybe they received a grant from the Together Now program, and now they're looking to apply for the Chicago Resiliency Grant. So just to kind of highlight for everyone that all of this funding is through federal money. This is through CARES Act money, through the Coronavirus Relief Fund, right? So there are some guardrails around double dipping. But that doesn't mean that if you're using the PPP funds to pay payroll for the months of, say, April, May, and June, that you can't use the Big Two programs for the months of July and August, or September and November. The same use of funds, but in a different bucket of time. So you can't double dip the use of the grant monies for the same expense in the same time period, but you can use it for the same expense in different time periods. That's completely okay. So I just kind of wanted to highlight that because there's so many different programs. I think it's important to remember that there's a no double dipping rule for expenses in the same time period, but you can absolutely use it to cover the same expense in a different time period.
Great, thank you. A question came in, who is the capital partner / program mentioned for South and West sides? It was mentioned $100 to $500,000.
Absolutely. So that's again the Chicago Black Entrepreneurs Fund, and that's a partnership between Axion and LISC. So Axion is deploying that capital up to $100,000, and LISC is deploying that capital from $100,000 to $500,000. So the Chicago Entrepreneurs of Color Fund.
A question came in. I started a service-based business at the beginning of the year, and I'm looking for advice on ensuring that my business can survive the current climate. Are there any incubators or arts / service-based advisors in Chicago I should seek out?
Hi, this is Jessica. I'd love to take that question. So, Jason, one of the incubators that I'm aware of is 2112, and so I'll drop that web address into the chat for you as well. But if you are a nonprofit organization or one that receives funding from the MacArthur Foundation, the MacArthur Foundation offers a really great program that we're proud to be a partner of. That's called the Arts and Culture Loan Fund, and that pairs capital with technical resources. And the advisor in that program is SMA, and so SMA is an advisory provider that does have a specialty in the arts as well. So hopefully that's helpful.
Okay, thank you for mentioning those. Next question is, what is the minimal credit score allowed for you to secure a business loan and a business line of credit?
I'd be happy to take that one as well. So obviously, we mentioned the importance of credit, personal credit, how that parlays into your business credit worthiness. I think there are often exceptions in this process because we're taking all of those 5 C's into account. But you can typically define, good credit and above as being, the benchmark for obtaining bank financing. I'm sure, Lotica, you could speak to this further as well. But when we're evaluating credit on our end, the good range is usually 670 to 739, very good 740 to 799, and 800 and above would be exceptional. But obviously there's extenuating circumstances. Occasionally we often have to navigate situations of identity theft and other components. But that's usually a pretty general baseline for what could be considered good, very good, and exceptional.
I'd like to add to that's so Jessica's viewpoint is from a traditional lending perspective. So the minimum FICO score that you're looking at would be, 670, 680. That's the absolute. Traditional financial institutions will have a very tough time looking at FICO scores below that. However, there are alternative lenders and micro lenders like the WBDC, for instance. Our focus really is, we try to what I call bank the unbankable. Our goal is to be the first tranche of debt capital into the hands of small business owners, specifically in low to moderate income communities who actually don't have good credit scores, who don't have access to bank financing. So typically the credit scores would be around between 600, we look at even a 580, and then, that's kind of like the range that we play in. And our goal is that we provide them with this initial first infusion of capital. We wrap around our services that we provide in supporting the business, deploy that capital efficiently, and we move them up the credit curve. So as we are moving them up the credit curve, our goal is that the next time that they are applying for another round of financing, they're not looking at us. They're looking at a traditional financial institution at that point. So that's kind of how we operate. But, I think with traditional financial institutions, you definitely have to be 670, 680 and above.
Great, thank you. And this will be our last question, and it is, when do all banks receive the process for forgiveness? This person's bank has not allowed them to submit for forgiveness as of yet. I noticed there was mention we have until the end of the year. This person did not mention what type of grant, but potentially I would think the PPP.
You have a little bit more than the end of the year. So I think what I mentioned is that the borrower has up to 10 months after the end of the covered period. So your covered period to use the funds ends on 12/31/2020. And I apologize if I wasn't clear when I mentioned that. So the PPP funds that you borrowed can be used up till 12/31, for expenses incurred up till 12/31/2020, and that's it. But you have up to 10 months after the end of the covered period to actually apply for forgiveness. And any amount of loan that hasn't been forgiven actually has to be repaid, obviously, before the maturity date, but that's kind of the timeline. Like, I don't know where Fifth Third is on the forgiveness application process, but I know a few banks have started. But again, some of these rules are changing constantly.
Exactly.
And, it's hard for really big financial institutions to implement like a cohesive, single platform for forgiveness till everything is kind of sorted out by the federal government. I can say it, Jessica,
Right. No, I think that's spot on, Lotica. And working through this presentation, the idea of pivoting and responding, I couldn't help but think about the PPP process and how, in a lot of ways, there's some parallels to what businesses are facing in the community and how the bank was facing, COVID and needing to stand up an entirely new process and make that technology investment and pivot and respond. So I can't speak to, other banks, but I can certainly speak to Fifth Third. I know we received, and as did everyone, the forgiveness application and a few subsequent iterations of that in early August. And while we were mobilizing a new platform to receive that forgiveness, to build in that forgiveness application, we have deployed those forgiveness links, and it is delivered in waves. And I believe the majority of our clients who have received PPP should now have received that forgiveness link. So it's possible that this bank in particular is doing the same, and perhaps that PPP loan was deployed later in the process and might just be at the tail end of that cycle in particular. And again, these are my observations as an individual, but not necessarily the views of the bank.
Wonderful. Well, thank you both for joining us this morning. I do want to mention that this webinar is being recorded and will be made available on our YouTube channel, which is youtube.com/Chicago BACP, and that link is posted in the chat box. For both of you, if someone has additional questions, can you share some contact information?
Absolutely. So Jessica Redman, it's jessica.redman, REDMAN, @53.com.
And my email is also very straightforward. It's just LPAI, so the first letter of my first name and my last name, LPAI@wbdc.org.
Hey, wonderful. And those email addresses are posted in the chat to reference as well. So once again, Jessica and Lautica, thank you so much for sharing this information with our attendees. It's been an absolute pleasure, and I hope it was extremely helpful to everyone. Thank you so much for joining us.
Thank you.
Thank you, everyone.